Good morning, Carl. And we have all 10 sectors to the downside right now. But the big story is really overseas, where a lot of traders are talking about the yen strength. Remember, when stock traders start talking about things like the yen, pay attention because it's not normally on their radar. So it's essentially 6 days, maybe 7 out of the last 8. The yen has been strengthening, a 17-month high against the dollar. It's all the result of more dovish Fed commentary. So dollar weakens, the yen strengthens. Japanese officials have been trying to talk down the yen this week. They have been unsuccessful, as you see by this chart. Remember, we were at 113 just a few days ago. These are very, very big moves here. And look what it's done to Japanese stocks. Obviously, there's a concern here. This makes exports more expensive for them. Toyota, of course, sells cars here. They repatriate the profits to Japan. They get fewer yen. You get the story here. This is just this month. It's April 7th, for crying out loud. Panasonic's down 13%. Kubota, the big competitor for Caterpillar, which makes heavy equipment machinery all over the world's down. Hitachi's down 8%. Nomura's down 8%. Toyota. These are pretty serious moves to the downside. If you take a look at the Nikkei, just the broader Japanese market, it was up fractionally overnight, but nobody cares. The trend generally has been down this year. In fact, the Nikkei's down 17, 18% this year. It's one among the worst performers among global markets here. Here in the United States, all 10 sectors started to the downside, so most everything down fractionally. Consumer staples, financials. Telecom week, you mentioned Verizon with the downgrades. Remember, Verizon and AT&T also were ex-dividend yesterday, so a little weakness there on top of that. The few retailers that still report, I thought they were pretty good. L Brands were up 3%, but Bath & Body Works, their subdivision there, that was up nicely, about 5%. Victoria's Secret was up about 2%. That was in line. Costco might have been a little bit of a disappointment on the 1% increase. I think people were thinking more. But remember, Costco was flat to negative all throughout last year, so at least 1% is trending up. That's good. Traffic was up 4%. But we're still, Bed Bath & Beyond's up nicely, too. They beat on the top and bottom line. They also started a dividend, 12.5 cents. I think that's a good sign for them. But it's still very not rosy in retail. And I was talking to Retail Metrics this morning about how the numbers are ending out for the first quarter. This would be the quarter ending in February, and they're all in, basically. Look, earnings down. It's 118 retailers. Earnings are down 1%. Same-store sales are up a little bit. Revenues are up 3.5%. This is not that great overall here. I mean, we've got really strong job gains. You would have hoped you would have seen better numbers by now. But as we see, and what's up with retailers here, the job gains are strong, but wage gains have been minimal. And the consumers, as we all know, are spending on home improvement, they're spending on autos, they're spending on restaurant, they're spending on travel, but they're not spending in the malls here. And at the same time, these retailers have had to have a significant investment in e-commerce. Now, it's very hard to break this out, the e-commerce, but Bed Bath & Beyond, which had a decent report, as we mentioned, did make some comments overnight in their earnings report that are very revealing. So Bed Bath & Beyond same-store sales were up 1.7%. But almost as an aside, they mentioned that stores, these are the regular old stores themselves, sales were basically flat, and they went out of their way to say that online sales were up 25%. We don't have a lot of data because a lot of these companies just don't break it out this way, but I think you can assume that this is the trend, that this is clearly what's going on. Online, for those that are still spending a lot of money, is up anywhere from 15 to 25%, the numbers of a few we've seen that reported, and same-store sales, the store sales are basically on the flat side. This is the big problem. Significant investment in e-commerce, growing, but still relatively small part of the business, and the consumers not spending much in the stores at all. So good news for phone and the Home Depots of the world. Not so good if you're running Macy's or any of the classic apparel stores. Right now, the Dow down 105 points. Guys, back to you.